This is the little book that beats the market. Thing is about Joel Greenblatt is that I think he's kind of funny. He's very dry, and he's written this little book, which I think he wrote for his kids to sort of relay the information that he's learned over the years. Very successful hedge fund manager. I think he's worth close to $1 billion. By the way, when I say that, I'm not trying to big these people up because they're rich at all. I'm really bigging these people up because they have strategies and they stick to them. Same way, say Arnold Schwarzenegger came from a little town in Austria and went over to Los Angeles and became Mr. Universe 7 times in a row or whatever. You know, this guy, he had a strategy and he stuck to it, and it's worked really well for him. And now he's made this little book, and this little book is good. It's got endless amounts of information, but the key thing with him is that he offers you a strategy. Now, once you have your foundation, you sort of understand the basics of investing and what you're trying to achieve, you're then going to start looking for strategies that work for you. This is a really good book if you want to actually try out a strategy that someone else is advising you to try. Once you have your foundation set and you understand investing a little bit, you're going to be looking for a strategy. This is the book that's really going to show you some really ideas that you can apply. And I love it. I really love it. And I want to show you guys my portfolio since I've started this. But the main thing for me is that I normally have a portfolio. I'm like, oh, when should I buy this or when should I sell this? And then, well, he tells you to hold the stocks that he advises you to get for at least a year. And this gives you a bit of a discipline and a bit of a structure, which is something I was always lacking. So what are Joel Greenblatt's main principles? Well, what he does is he finds within the stock market, the US stock market, he identifies the ones that are undervalued. And undervalued, what does that mean? That means, okay, this company is doing really well financially. This company is making so much money, it can reinvest and it can expand, but they are underpriced. So you might want to go headfirst into tech stocks and you think, right, Tesla, Amazon, Google, they're all pretty high and they're reaching, like every week they're getting new highs. How do you know if they're undervalued or overvalued? Thing is, he has the formula which helps you detect whether their current stock price is undervalued or overvalued. And the great thing about it is that he suggests that you buy 20 to 30 of these stocks and you hold them for a year. And by doing that, you're going to hopefully get something in the range of 20 to 30, sometimes 40% year on year. And he's using that based on past data if you had implemented the strategy. I've only just started this in March, which was around the time of the COVID-19 pandemic. And I felt very comfortable with it, and I really look forward to showing you in the next video the stocks that I bought, how I did it, and the amount of research that I had to do. He has a website which makes things so simple, and I want to take you through it because I think if you're a bit further ahead or if you're interested in having a strategy, this is one that might work for you. So I look forward to speaking to you more about this little book and showing you my portfolio.